So is being diversified in your investment portfolio the best move for you based on your needs, your life situation, and your goals? I think a lot of you guys need to start asking yourself this question based on where you're at, what your age is, what your risk tolerance is, etc. Okay? Maybe being diversified in your investment portfolio is not the right move for you. And that's what we're going to talk about today. Okay? But before I begin, I want to let you guys know that nothing in this video is financial advice. I'm not your financial advisor. I'm not your financial counselor. What you decide to do with your money is up to you, and you need to take responsibility for your buys and your sells. Okay? With that being said, let's get into the video. So diversification, right? Now, what is diversifying, right? A lot of people in investing who think that they're really smart, they talk about how you need to diversify your portfolio. And that means that you should have some stocks, you should have a 401k, you should have a Roth IRA or something of the sort. Maybe you should have some T-bills with the bank. You should you should have a lot of savings. Maybe get a property, get some gold, get some silver, get some commodities, things like this, right? Now, I'm going to challenge that view, and hear me out, because it's a lot of things that this is a topic that a lot of people, financial advisors and investors have, that I think I have a different approach to this. Okay. And my argument is that for a lot of you guys, and a lot of you guys that are watching my videos and consuming my content, all right, are in a position where maybe diversification of your investments is not the right move for you. And maybe you should instead take a different approach. And that different approach is being niched into one, specializing in one, and have less eggs, but watch that egg carefully and get really niched and really lock in on that one asset class. Maybe the one that's the most lucrative for you, right? So the first thing that I want to do, you guys, is I want to identify the problem, right? What's the problem with diversification? Why is this not the best advice for most people, in my opinion, especially younger people? And what I would recommend instead, right? So the first thing that we have to talk about is that the advice that older people give to younger people now doesn't work anymore, okay? The times have changed, times have evolved. Certain variables when it comes to money and it comes to finance have changed dramatically. The world has changed. We've moved more digital. The same strategy that worked for maybe your parents, for you guys that are younger, in your 20s, even your 30s, doesn't work for you, right? So even though maybe your parents or people older than you that were very good investors back in the day, they might not have the same effectiveness in 2025 that maybe they did in the 80s or the 90s, okay? Now, history doesn't repeat, but it rhymes, right? So what is this advice that a lot of people give, right? That's the one thing that we need to identify. And the typical advice is get a solid job, save up your money, get a house. Maybe if you're lucky, if you have a good job, you get a pension, you get a 401k. You retire around 50 to 60 years old, and you live on Social Security, right? That's pretty much the standard game plan for what older people did, boomers, baby boomers, what they did that worked out pretty well for them, based on the economic situation, the financial situation, the situation with inflation, and that's what worked for them, right? And that's why they give that advice to you, because that was the correct advice when they were coming up and they were our age at 1.2, right? So the first thing so let's break this down, right? Let's break this down and let's actually dissect this and understand why that advice is not good advice anymore, okay? So the first thing that we got to say now, you guys, is that saving your money is trash, okay? Saving your money does not work anymore. Over time, if you save all your money and you hold dollars in a bank, or if you hold dollars, if you just hold dollars and you're hoarding cash, over time, what's going to happen is that's going to decrease your purchasing power, okay? Especially if you live in the US, all right? The prices of groceries, the prices of cars, the prices of houses, the prices of energy, all the things that mainly affect your life have went up way more over the past 10 years, 15, 20 years than they have in the past. Before, inflation was a little bit more manageable. Okay, debt, the government debt was not as much out of control. And so the prices and inflation was a little bit more stable. Okay, so that's number one. Okay, saving your money now, the same strategies that worked back in the day, maybe in the 70s and 80s, the 90s, saving your money was a little bit of a better strategy. 2025, not really the case. Okay, right now, based on the financial situation that all the countries around the world are in, all these countries are forced to print money. They have to print their currency units in order to refinance all the debt that they're in, because they're all bankrupt for the most part, right? So they have to keep refinancing the debt. How do they do that? They print money, because a lot of these governments are not profitable, right? So saving your money doesn't work anymore, okay? That's the first thing. Social Security, all right, that's the next thing. A lot of people are reliant, like a lot of our parents back in the day were reliant on Social Security, and that's a part of their retirement. And I'm just going to make this statement now, you guys, that Social Security is going to be bust by 2035, okay? The Social Security fund is already basically busted, where they basically are having trouble already paying the interest on the Social Security trust, okay? So basically, you guys, Social Security, for you younger guys who are going to be retiring in the next 15, 20 years, you guys have a lot more leeway to go. You guys should not be reliant on these pension funds, these Social Security funds, because a lot of these things are bankrupt, and a lot of these could be there could be government action that basically makes these things not relevant for you. And even if you do get it, let's say there's two options that can come from Social Security, you guys. Okay, they could either just come out and say they don't have the money to pay you. Sorry, you don't get your Social Security, or they could just hyperinflate and they could print money, and by the time you get your Social Security, it's worth nothing, right? Social Security, you guys, is one of the biggest Ponzi schemes in the entire world. All right, it's essentially the younger people paying in to fund the older people's lifestyle. The problem with that is that they take the money from the Social Security fund and then they take it out. Imagine it's like a cookies in a cookie jar, right? So what the government will do is they'll take the money out of the Social Security trust in order to pay for their expenses, because they don't operate at a profit. And then what they do is they just put in a receipt there and they say, we owe you 3 cookies. So they take 3 cookies out of the jar, they take the real cookies out of the jar, and then they just put a receipt in there saying that they owe you, right? And eventually that Ponzi ends, right? Especially as the population gets lower, which is what's going to happen, which is what's happening right now, okay? So you guys should not be reliant on these Social Security funds. You should not be reliant on that for your wealth, okay? Back in the day, your parents or the baby boomers or whoever it is, right? Social Security worked for them, right? Because it was a different economic situation. Okay. So that a little bit of a rant on the Social Security trust, right? Now the next thing that we have to do, another variable that's changed, is that inflation is killing traditional asset gains. For traditional assets, a lot of people who are in traditional assets and who are playing it safe, right? They're not even really increasing their purchasing power, and it's not doing the job that it once did, right? Because of the fact that inflation is out of control, these gains of these traditional assets, like the S&P, barely outpacing the real inflation number. I've talked about this on previous videos, but the real inflation number is not the inflation number that the Fed reports on. Basically, you got to at least double it. You got to double that inflation, and that's probably closer to what the inflation number is for the things that are relevant that you guys are buying, okay? So that's number one, right? The S&P, as an example, trades at, let's say on a good year, like on average, 10%, right? If inflation's at 3, 4, you're barely outpacing inflation. You're not really getting the gains. Now, if you're defensively investing, that's a different story, right? Maybe the S&P is okay if you, depending on the year, because sometimes the S&P is down and you lose money, right? But you're not really outpacing inflation with traditional assets such as the S&P 500. Bonds, government debt, if you buy government debt, they pay you a little bit of a yield. But if the yield's high, the bond value can go down, right? And the yield isn't even outpacing inflation. So a strategy that a lot of older people do is they get into retirement and then they put their savings or something in a treasury or a T-bill, short-term T-bills or bonds, and then they earn a yield and then they try to live off that yield if they have enough money, right? Now, the problem with this is that the yield is usually anywhere from, depending on what it is, anywhere from like 2 to 5%. And you're usually not even getting that yield. You're not getting that entire yield. But like I said before, the inflation number, if you adjust for real inflation, that is not outpacing inflation. You're maintaining and you're actually probably losing your purchasing power by parking your money in a money market or some sort of form of government debt. So you could buy debt and then the government will reward you by giving a yield. The problem with that is that the yield doesn't outpace inflation, right? So if you're trying to ascend and move up in your financial life, and you're trying to create wealth, that's not a good strategy, right? Because what you have to do when you analyze the returns of all these assets is that you can't just adjust for nominal. You can't adjust for just in terms of dollars. What you have to do is you have to put inflation into account in order for it to show how much of purchasing power you increase. Because guys, like I said, it's not about how many dollars that you have. What's more important is how much purchasing power that you increase over time. Okay. So golden commodities, gold, silver, all these other things, they're good. I mean, they have good principles behind them, but traditionally speaking, over the past 25 years, they haven't really done a good job at outpacing inflation. And there's a lot of reasons for that. There's price manipulation, there's market manipulation to that. But everybody already bought those things as well. So people have been buying gold for thousands and thousands of years. It's already a huge market cap. How much opportunity really is there for you to increase your purchasing power and ascend, right? Traditionally speaking, based on the past, we haven't seen it really do that well, okay? 401ks, pensions, the other thing about those is that they're locked. So, if you have a 401k or a pension, a lot of your money in that is locked until you're older, a lot older, 55, 60, 65 years old, okay? And by the time you get it, who knows what inflation is going to be, because inflation is just going to get worse and worse over time. So by the time you even get that retirement, how much of those dollars that's locked in those funds going to even be worth, right? You guys have to start asking yourself these questions, right? These are questions that are important. Now, if your company let's say you have a job and your company automatically offers you a pension by default, or they have a 401k program that they match 1-to-1, okay, if that's what you want to do, you can. But the thing that the seed that I want to plant in your guys' head is you guys have to ask yourself, are you really leveling up and are you really ascending based on the current variables in the economy right now, based on inflation, based on the banks, based on the government's debt, based on all that stuff? Are you actually outpacing? Are you actually outperforming inflation? And are you actually solving the problem that investing is supposed to solve? Right? So that's one thing to keep in mind. Now, the other thing that we have is real estate. I think that if you are going to defensively invest, if you know what you're doing in real estate and you're good at real estate, or if you know somebody who's good in real estate, I think real estate's a great investment, mainly for the cash flow and the tax benefits of real estate. Okay, it's not necessarily for increasing your purchasing power. Most of the time, a lot of properties in real estate will not make you ascend up. All right. The main benefits of real estate is the steady cash flow and the tax incentives if you set it up properly and you know what you're doing. Right. So real estate, if you're going to defensively invest, I think real estate is the best option. It is the most sound. It is historically the most tried and true way that millionaires be created. I think that trend is going to change. I think for people in their 20s right now, and younger, and even in their 30s, I think a lot of people got rich off of the crypto market. All right, a lot of millionaires were made in the crypto industry. So I think that trend might change, especially for people our age. But in terms of right now, throughout history or before then, a lot of people made their money off of real estate. They built their wealth off of real estate slowly over time. Okay, so that's another thing to keep in mind. All these assets that I've listed, you guys, everybody already bought these assets, right? People have been buying gold for thousands of years, right? Countries already buy bonds, right? All of the people that were older than us and already bought all these other things like real estate, property, everybody already bought the property, right? Everybody already bought the properties. All right. Now you can build more. There's nothing wrong with that, but everybody already bought these. So the prices are already up relative to everybody else, right? Whereas in the crypto market, 8% of the population is in crypto. So let's say that number doubles. Let's say it gets to 16%, 20%, 30%, 40% of people are involved in crypto, right? That's where the opportunity is, because all those people are going to be onboarding into the asset classes that we understand first. And then from there, we're able to increase our purchasing power because they're buying into our Ponzi, right? That's the thing about a lot of these boomers and why these older guys don't like crypto as much, is because at the end of the day, what they're doing is that they bought these assets for a very long time. And what they think is that all these crypto guys should be buying their assets that they already bought so that they make money and they can retire easier, right? But that's not what we're doing, right? We're creating our own Ponzi's. And that's why a lot of older people don't like crypto as much, as well as the fact that it's very techy. It's very there's a lot to know, and it's a steep learning curve, I would say, right? And I think a lot of people who are older, they're not really as motivated to learn that stuff because they don't need to, I guess, right? So that's something to keep in mind. You guys want to buy things that everybody didn't already buy yet, right? The equivalent of this would be in the 2000s, the dot-com bubble. That was essentially the beginning of the tech boom. And when technology really got added to the world at a main stage, all those companies, all the people who invested early in the companies that survived, and even the companies that didn't survive, there were a lot of people who made a lot of money on web 2, YouTube, e-commerce, social medias, Facebook, Meta, all that stuff, right? So a lot of these guys, that was where their opportunity was, and that's where they really, really ascended up, right? And crypto is essentially just the next extension of that, right? As the world moves more digital, and as the world gets more digitized over time, these types of assets are going to thrive, and they're going to be a bigger part of the financial system as well, right? So a good way to think about this is crypto is essentially like the Wild West, when it's essentially the modern day gold rush, where everybody in America, when they were first immigrating to the U.S., they were running across the West Coast. They were buying land for dirt cheap. They were doing all this stuff. They were getting as much as they could. It was a gold rush, right? They were rushing. They were able to get cheap land. And Bitcoin and crypto is the same today. All right. Instead, it's digital land, right? The world's moving more digital. The crypto space is essentially you running across the West into the US and getting all the cheap assets before everybody else does, right? It's a good way to put it, if you think about it like that, right? So I mentioned this a little bit earlier, but we have to talk about defensive investing versus offensive investing, okay? Defensive investing is more of, you're not really trying to ascend, you're trying to just maintain your purchasing power, right? You're just trying to maintain, you're trying to retire, you're trying to live off of your wealth. It's better than holding just straight cash and saving all of your money. But for you guys who are trying to ascend, and I know a lot of you guys who are watching this video, some of my guys are trying to ascend up, and they're trying to really increase their purchasing power and really use this and use investing as a tool to make more money. Because you guys got to remember, there's only two ways to increase your wealth. All right, it's making more money, and it's multiplying the capital that you already have, right? And you guys should be, for you men out there, you guys should be focused on both, right? You guys should be focused on both, increasing your money, getting your money up, getting a side hustle, starting a business, or just doing something, or getting a higher paying job, or whatever it is. But then you also, with the money that you already make, you guys should be trying to delay gratification, put a portion of that money that you make into assets that appreciate over time, so then you can become more wealthy over time, and it compounds over itself after a long period of time, right? So in my opinion, I'm a crypto consultant, so this is what I do. Crypto has been shown to be the best way to offensively invest, okay? Offensive investing means you go from Let's say you have 10 grand right now, you can turn that into 100 over a relatively short amount of time, a couple of years, right? One full bull market cycle, you could turn 10 into 100, you could turn 100 into a million, you could turn a million into 10, or even 5. 1 million into 5 is perfectly fine, right? I mean, it's been shown that's what happens. If you guys want to look at the price charts of Bitcoin, you guys want to look at the price charts of Ethereum over a relatively short period of time, 5, 7 years, even 4 years, if depending on the timing, you can really change your life, okay? And it's the best way to really ascend and take a level up in your financial life, right? So the video is talking about diversification and why it doesn't work for most offensive investors. For you guys in your 20s, you guys in your early 30s, you guys are trying to get your lick, you're trying to make the most out of the energy that you already have. When you guys go out and work, you guys go out and make money, you guys go out and hunt, you guys get the money. What you do with that money is another thing that a lot of people don't consider. A lot of people are not very efficient with where they park their capital. And money's just energy, you guys. That's all it is. If you have money, then you have to park that money and put it to work for you. If you put it to work for you, then you won't have a problem with purchasing power if you do it correctly, right? Or you hire somebody and then they will, and then you can delegate that responsibility to them, right? That's that's essentially the play for busy professionals that don't have a lot of time to be researching and really learn about investing, right? So in terms of solving the inflation problem and increasing your purchasing power, I think over time, if you have a good strategy for it, crypto is the best way to solve that problem, okay? Diversifying your money, if you guys are all spread out in all these different assets, let's say you have 5% in crypto maybe, and then you have, maybe 10, 15% in real estate, you have a bunch of stocks, you have a 401k, you're diversified and all that stuff. The question that you guys have to ask yourself is that a good strategy for you? Right? It might be a good strategy for your parents. It might be a good strategy for somebody else, but is it a good strategy for you? Right? Are you trying to ascend? Are you trying to really take a leap up and you're trying to get aggressive in investing and you're trying to use it as an opportunity to level up? Or are you just using it to maintain, maybe even underperform inflation, underperform other assets, right? I think this is a question that you guys need to ask. A lot of people sound smart. They think they sound smart when they say, oh, you need to have a diversified investment portfolio. I think it depends on your goals. I think for a lot of you guys that are watching this video, I think that a lot of you guys should just be sub-niched. I think you guys should seek out and you should objectively look at where the opportunity is. And you guys need to be like, okay, I'm going to double down and be all in on this asset. I'm going to double down and I'm going to specialize in the crypto market because I recognize that's where the opportunity is. And that's what's needed to accomplish the goals that I have, right? It all depends on your goals and your investor profile, right? You guys need to be asking yourself these questions. Okay. So, in 4 to 8 years in the cryptocurrency market, 4 to 8 years, you guys can change your life. If you guys do it right, you guys are patient, you're consistent, you're consistently delaying gratification, you're paying yourself first every single year. Based on past performance, we've seen that crypto does that the best. I mean, crypto has made a ton of young millionaires in the world. It's made a ton of people, even if you're not a millionaire, even if you have, let's say you invest a couple thousand, it's all you have, you invest 10,000, you turn that into 50, 60. Guys, that's a beautiful thing. You're not going to find that in other traditional assets. Now, if you're like a traditional stock picker or something like that, and you pick NVIDIA, at the bottom, which nobody did, but if you do, in the case that you do, then great. That's awesome, right? I think the easiest place for you guys who want to be offensive investors to really change your life and to improve your purchasing power the most and optimize it the most is to go where most people don't understand. People are not in yet, and that is the cryptocurrency market, you guys. So instead of building a portfolio where you're steady for in 30 years you can retire, you're older, you've wasted all the time. Instead, what you guys can do is you guys can take a little bit more of a balanced approach. Be like, hey, listen, I'm not trying to get rich right now. I'm not trying to get an 100x like a lot of these meme coin traders are, and 100x in a month, or you're not trying to get rich overnight. But instead, take a more balanced approach, right? And say, hey, listen, I understand there's opportunity in this market. It's not going away. It's getting more adopted. A lot of people still aren't in the market, and I'm just going to be patient, and I'm going to delay gratification, and I'm going to level up. I'm going to use this industry as a tool to level myself up in terms of freedom and wealth. Okay, you guys. So I hope this message was clear. Very, very long video, a lot to break down, but I think the message is very, very important for you guys to consider. Okay. This is very, very important for a lot of you guys who are listening to a lot of people. A lot of people have advice for financial, investments and things like this. But a lot of these guys that are recommending this stuff to you, they don't even outperform the basic. A lot of these financial advisors, they don't even outperform the S&P 500, right? Not to mention Bitcoin. They're definitely not outperforming Bitcoin. I mean, they're just not, right? So you guys have to really, really look at the results, and you have to understand that a lot of you guys are not in the position to where diversification is the best move for you. Okay, the best move for you is to just be more offensive, take a little bit more risk. Don't be a complete degenerate gambler, right? But be a little bit more risky. Understand, get educated in the crypto market, and understand the opportunity that's in front of you, and go take it, right? Go take it. It might be uncomfortable at first. Over time, it's just like going to the gym. You go to the gym every day. Over time, it gets easier to do. You don't get sore anymore, right? Crypto is the same. Every single time that you buy, every week, it compounds. It feels good. It's like you're training the DCA muscle, right? You're doing the DCA curls, right? You're doing the DCA curls for your future self, your future family, and overall, I think it's just a very good opportunity for you guys. So I'm going to cut this video now. It's going to be 27 minutes, probably the longest video I've done, but I think this video is very, very important for you guys to consider. Okay. So just some things to keep in mind. Okay. I hope you guys have a good day. If you guys want to follow me on TikTok, Instagram, Chase Your Grace, link down in the description. You guys want to jump in the free Telegram chat, link down in the description. A lot of good things coming. A lot of good things coming for you guys. So stay tuned. I appreciate all of your support. Okay, subscribe on YouTube, like, hit the notification bell, all that stuff. If you find value in this, let me know what you think in the comments about what I said. A little bit of a controversial take, but that's okay. All right, guys, have a good day. Bless up.